Hello there. Welcome to this video. I'm going to teach you how to perform fundamental analysis for Forex trading. A little bit about me before we get started. My name is Samuel Morton. I've been a Forex trader since 2011. This is my channel. You're very welcome here. Check out my website, actualforextrading.com. Okay, let's start off with the real basics. Let's make some space. And let's start with the question, what is fundamental analysis? The easiest way to answer this is to first answer what is technical analysis, because I'm assuming most of you watching this video at least know the basics of technical analysis. I can imagine a lot of you know technical analysis pretty well, and now you're moving on to fundamental analysis. So what is technical analysis? How would you answer that? I would answer it that technical analysis is the analysis of price data, the study of price data to predict where future price may be. Keeping that in mind, what is fundamental analysis? Fundamental analysis is the study, the analysis of economic data to predict where future price may be. Technical analysis, fundamental analysis, they have lots of similarities, and the purpose of both is to predict future price. Second question, why? Why learn fundamental analysis? Why incorporate fundamental analysis? Once again, let's answer this question with regard to technical analysis. So answer, why did you learn technical analysis? Why use technical analysis when it comes to trading? I can imagine your answer is something along the lines of, it helps me to predict where future price is going to be. Hey ho, that's what fundamental analysis does too. And what you'll find is if you combine fundamental analysis and technical analysis, you have a much more successful way of trading the market. At the most foundational level, combining both will help you to understand the market so much better. Third question. So we've had what, why, how. How to perform fundamental analysis. Well, that's what this video is all about. I'm going to show you how to perform fundamental analysis. But to answer it very briefly, once again, let's answer this question from a technical analysis point of view. So let's focus on technical analysis. How do you do technical analysis? Well, you study indicators and price action. That's what you do, price action and indicators to predict where future price is going to be. How do we do fundamental analysis? Well, we study economic indicators, economic figures to predict where future price may be. But there's a lot more to that, and let's jump from TradingView and go to Excel, because that's what we're going to need in order to perform fundamental analysis. So this is a very basic fundamental analysis spreadsheet which I've created. There's lots of tabs down the bottom here, and I'll go through all of these in this video. And right at the end, this last tab is kind of a summary of all those tabs, and ultimately what our study of all this data is going to do is to help us to either be bullish, bearish, or indecisive on any particular currency. So just like you would study price action and moving averages on certain currency pairs to determine the bias, the technical bias, we're going to do exactly the same thing to determine the fundamental bias. And like I said earlier, combining those things together gives you a much more effective way of trading. Let's go to the beginning here and let's look at inflation and interest rates. There is at least 3 sets of economic figures, economic data that you're going to have to track and forecast in order to have any sort of strong fundamental analysis. And that's inflation, GDP growth, and then some sort of job market, labor market data. I have unemployment rates. So those 3. Why those 3? Why inflation? Why GDP growth? And why some sort of labor market data? Well, those 3 are what central banks are watching. And when a central bank changes interest rates, it's usually down to one of these 3 or a multiple of these 3. They're tracking inflation. Is inflation steady? Is it climbing? Is it too low? The same with GDP growth. Is the economy growing? Is it slowing down? Is it going nowhere? Is the economy in recession? And then the labor market. Is unemployment rising? Is it coming down? Are enough jobs being created? So these 3 areas are the main things that influence a central bank traditionally. There are other things too. You could say things like tariffs impact a central bank's decision to change interest rates, or COVID, pandemics. But ultimately, what these things are doing, tariffs, COVID, is they're having an impact on one of these 3, or at least one of these 3. Sometimes it's all of these 3. COVID, tariffs, they can impact inflation. They can impact GDP growth. They can impact the labor market. So these 3 are the ultimate 3 you really have to track. And the reason why you're going to track them is, like I said, they have an influence on interest rates. And interest rates are the biggest influencer in the FX market. Not so much stocks and shares, though interest rate changes do impact the stock markets. Obviously they do. But when it comes to currency trading, interest rates are a real key when it comes to fundamental analysis. So how does this work? Well, let's start off with inflation. This spreadsheet here, which you can download this whole template from my website, and I'll show you how to do that at the end of the video. The way this spreadsheet works is I have each country that I want to trade, the currency of these countries down the left here. I have their target inflation, which is set by the central bank, which is usually around 2%. For some countries, it's sometimes a bit higher than that, but most of the time, especially for Western developed countries, it's about 2% inflation. And what you'll see on this spreadsheet is I have the current interest rate, so I track the interest rate every month, and then the inflation rate every month, and then this is the target again. So this 3rd and 4th row, the last row on all of these tabs is always the target figures. So these are the target here for GDP growth, but we'll come back to that in a moment. What we're ultimately trying to do is see if inflation is rising, if it's steady and under control, or if it's low. In other words, another way to put that is inflation above the target? Is it within the target? Is it below target? Typically, if inflation is above target, that means that interest rates could go up, and we saw that post-COVID. So inflation was climbing, so interest rates had to climb too to tackle that rising inflation. I hope you're taking notes. I should have said that at the beginning. If you're not taking notes, pause the video, get a pen and take some notes, because there's a lot in this video. If inflation's too low, if it's below target, then interest rates could be cut to try and stimulate inflation, bring it up within target. And if inflation was within target, then that may not have much of an influence on interest rate decisions. So what you're trying to do is record the inflation every month and see if inflation is above target, below target, within target, climbing, declining. And the easiest way to do that is create a graph based on these figures. So what this template does is, as you put these figures in, you can then go to, say, the Australian dollar, and we have an inflation chart here. And these red lines are the target, and the inflation is this green line here. This white line is the interest rate. So we can see from this chart that inflation is coming down, but it's well above target. It's a lot easier to spot that on a chart than it is on a spreadsheet like this. Hence why I do the charts. So that's inflation. One of the things you need to track. Now, how do you actually track this? How do you get these figures? Go to tradingeconomics.com. Let me bring the website up. So this is Trading Economics. What you can do is create a free account, subscribe to all the economic data that you want to be notified of, and they'll just email you these figures as they're released. It's really good. It's all for free. It's a great service. I highly recommend it. They also offer a calendar, so if you want to see upcoming events, so if we just scroll down, so what's upcoming, we have unemployment rate for Japan, that's coming up. We have PMI figures, inflation. These are all things covered in this video, so the calendar is also very helpful. So that's the basics of inflation. You need to track inflation at a minimum. This is a must. This is one of the things you have to track if you're going to do fundamental analysis and you're trading the currency market. Next is GDP growth, which really measures if an economy is growing and how much it's growing by, or the opposite, is an economy shrinking and how much is it shrinking by. I personally track quarter on quarter rather than monthly figures or yearly figures, hence why this spreadsheet has quarters rather than months. Obviously you could change this and you could do monthly, or the YOY figures, which is the year on year. I do quarter on quarter. Now, once again, this spreadsheet, it has the gauge, the target, which is 0.5% to 0.75%. I think it's the same for pretty much all economies. Yeah. That's per quarter. And there's some notes at the top here, which you may find helpful. Then the top line is the actual figure for these economies. Once again, what we're going to look for is GDP growth climbing? Is it moving sideways, not going anywhere? Is it within target? Is it above target? Is it below target? Is it negative? If GDP growth is negative, you're looking at recession. Once again, I'm saying a lot. I'm giving you a lot of information. Really, this should be an entire course. I'm cramming a lot of information into this video, so please take notes. Obviously, you can rewatch the video. You can download the template, and I think as you fill it in, you'll be able to obviously steepen that learning curve. How does this impact interest rates? Well, interest rates can increase to tackle an economy that's growing too quickly, and they can be cut to try and stimulate growth. So what you'll find is if a country's in an economy's in recession, if the GDP growth is too low, if it's below that target or falling, then a central bank may cut interest rates to stimulate growth. Once again, this is a big influencer on interest rate decisions. If you're going to use interest rates, and I really suggest you do, if you're going to use interest rates as part of your fundamental analysis, then inflation and GDP growth are a must. These three, labour market, GDP growth, inflation, these are the most minimum, these are the most foundational principles of fundamental analysis in the FX markets. Not so much in the commodity markets or stock markets, but for FX, please track these things. Next is unemployment. You don't necessarily have to track unemployment. It could be, for the US, you're going to track NFP, non-farm payrolls, or other job-related economic data or indicators. For me, I track unemployment. Now, healthy unemployment is between 3.5% and 4.5%. So once again on this spreadsheet, I have the target 3 to 4.5%, and then the actual. One of the reasons why I put these targets down is it helps with these graphs. So if I click on the Australian dollar, you can see unemployment here. The red lines are the target. You can see the green line, the actual, is within the target, which is a good thing. So the way unemployment impacts or influences interest rates is if unemployment is too high, then interest rates can be cut to try and stimulate the job market. If it's too low, there could be a hike to try and bring unemployment up. Fairly rare, but it could happen. Very low unemployment is not necessarily a good thing. If unemployment is steady, within range, within target, then it may not have any influence at all on interest rates. So that's unemployment. Now, just to demonstrate this, let's do the Canadian dollar. If I was to put in, say, 10% unemployment in September, you'll see that the chart updates automatically. So unemployment here, you can see it's really rising now to 10%. We could do the same with inflation. So this is the inflation chart. If I go back to inflation, Canada, if we put inflation, let's do 10% again, massive, just to demonstrate this, and go to the CAD tab, you can see that's been updated. So all updates, you fill in the information, the actual figures as they come out, and the spreadsheet updates, and you can look at the charts and you can forecast what is happening. Just as you would look at price action, you can look at the charts here to try and understand what is happening. Is inflation climbing? Is unemployment declining? Is GDP growth going anywhere? These are the questions you need to ask yourself. Okay, so that's the most basic three. Interest rates, GDP growth, unemployment. Now, what you can do once you've looked at your charts is you can have some sort of summary, which is this last tab here. And you can see I have major bias here, and I have my inflation, I have my unemployment, and my GDP growth. And I'm just color coding these based on whether they will influence interest rates to hike, cut, or remain the same. So I have two greens here, which are two positives, meaning interest rates could go up. I have one red, GDP growth is below target. So that's an influence for cutting interest rates. And ideally, what you want to see is, say, red across the board or green across the board, which is then an obvious buy or sell for you. Now, it could be that you want to add another column here, okay? And it could be that this other column is going to be for other items, because there are other items that can impact the direction of a currency that don't fall under these things, which are major influences. Things like war. When war broke out in Eastern Europe, it had a negative impact on the euro. It wasn't inflation, it wasn't unemployment, it wasn't GDP growth, though I guess the fear of war was going to impact those things, which would eventually impact interest rates. But, that breakout of war has an impact. War has an impact. Tariffs have an impact. Pandemics have an impact. These are some of the things we've seen in recent years. So you could have another column here to track other items that can impact the financial markets that come under the wing of fundamental analysis, but are not these traditional things. So I'll put another column there for other. Okay. There are other economic figures, economic indicators that you can study. It's not just about these three: inflation, unemployment, and GDP growth. There are other tabs here, such as PMI, which I believe is the Purchase Managers Index. And generally, economies have two sets of PMI figures, one for manufacturing, one for services. And the way this works is, if the figure is above 50, the monthly figure, the PMI figure is above 50, that generally indicates expansion. If it's below 50, it can indicate contraction. So really, PMI could be sort of like a leading indicator into GDP growth. If you're tracking this quarterly, it might be a good idea to track PMI monthly. So this could help you gauge future GDP growth figures. As an example, there's lots of ways you can use this. Just as if you put a technical indicator on your charts, there's lots of ways you can use that moving average. You can use it for direction. You can use it for support and resistance. You can use it for crossovers. Lots of ways you can use one indicator. It's the same with fundamental analysis. There's lots of ways you could use these PMI figures. And once again, they show on the spreadsheet here. There's the manufacturing, the services, they're both green. And then 50 is that red line. Retail sales. So money spent in the retail sector. Is more money being spent over time? Is that sector growing? Are there more sales than previous years, previous quarters, whatever? Or is it shrinking? Once again, this could have an impact on GDP growth. It could even impact the job market. So if the retail sector starts to really suffer, that could influence these other major things: GDP growth, unemployment. So questions you can ask yourself. I personally don't really track retail sales at the moment, or PMI, or balance of trade, which is the other. I tend to focus on these big three. But in previous years of trading, I've tracked these 6 plus more. Okay. Balance of trade. So balance of trade is the difference between an economy's imports and exports. Do they have a trade deficit or a trade surplus? And is that climbing? Is it declining? So it's the balance of trade. Once again, this shows on one of these charts, you can see and analyze what's happening with balance of trade. We then have all these currencies, all the charts where you can have a look and go through. These are updated automatically, as mentioned earlier. And then this last tab here, we have our major bias, or our major sort of indicators, our analysis of our major data. Other things where you could put war, pandemics, trade wars, whatever, Brexit. And then there's a space for minor indicators too. I put PMI, retail sales, balance of trade, which are very popular sets of economic data worth using. And then eventually what you want to do is analyze all of this information to come up with a bias. Am I bullish the Australian dollar based on the analysis of that economic data? Am I bearish, or am I indecisive? I don't really know. There's not a clear picture. Now, from my experience, is you'll typically have, say, 2 or 3 currencies where they're obvious buys or sells. Everything else is a bit murky. That's from my experience and how I analyze fundamental analysis. So you don't necessarily have to have a bullish or bearish bias for each currency. It could just be that at this particular time, you're bullish the dollar, bearish the euro, and bullish the Australian dollar. And they are the currencies you focus on, and you create your watch list, your currency pairs based on that. So I've covered a lot of information in this video. It is a half an hour video roundabout. Really, this could be a whole course in itself. And I do cover more about fundamental analysis in my Ultimate Forex course, which is on my website. But if you want this template, let me show you how you can get it. If you head over to my website, actualforextrading.com, click on free stuff, I have a fundamental analysis course here, which is all for free. Click on that, and then at the bottom of this page, what I'll do is I'll put a link. So there's a PDF that you can download here, all about fundamental analysis. I'll put another link down here that will be this template, and you can download the template all for free. Any questions about fundamental analysis, about anything I've said, leave them below. I am here to help you. Let's go back to the chart here and end on this chart. Okay, so what is fundamental analysis? Why should we do fundamental analysis? And I guess more importantly, for the sake of this video, how to perform fundamental analysis. You should now have a better idea of how to do fundamental analysis, how to track economic data in order to predict future price direction. If this video has been helpful, please like, please subscribe, please check out more of my videos. Those 3 things mean a lot to me. I've created this all for free. I'm not necessarily trying to sell you anything, just any support you can give me is much appreciated. If you're looking for a decent broker, I have some links below of the brokers that I use, and I'll speak to you in another video.